guys. Tom's not here today. He's out for the afternoon. I'm John Logan, filling in, and happy to be here. I had a lot of action today. We're going to try to cover some of it, try to make some sense out of what happened today with some of the Ukrainian, Russian, some of this that happened this afternoon, or actually around lunchtime, I should say. And the first thing we're going to look at here is we're going to take a look at, if you're seeing my charts here, we're going to take a look at the S&Ps and just try to figure out what exactly happened. Here's the situation on our S&Ps, and here's our unfair lows on our weekly. This is the inflection point that we paid attention to on a long-term basis for quite a while here now, and 1933 is that level, along with that 1940 on our S&P level, on our S&P daily intermediate time frame. And as you can see, past couple of days, we've closed above, come back and retested, launched forward. We actually almost reached to the tick our former breakdown level on our daily. 1961.50 was approximately that price. Came up today, and actually, let's see, where did we reached 1961. That was a target we talked about possibly being on the upside this morning, and then we had the break. But 1940 seems to have held again, and for the shorts, that's pretty damning. Considering that we're back in the fair auction on a weekly, and it looks like we're going to have a Friday close within that fair auction. And what do I mean by that fair auction? That is where prices are considered to be balanced. And if you think about a bell curve in statistics, you talk about that meaty part of the bell curve where most of the statistical data should lie. On a long-term basis, most of that statistical data should lie between 1933 and 1978 right now. And we've crossed some borders, and we've come back and retested those on the downside here, where we had former resistance on a daily, now support at 1940, and that's just the way it goes. On a 240-minute, we bounced around within that fair auction. We're still within, but that's pretty strong to get that kind of news, ricochet down, rally back up. Not that that's more than likely going to get settled out. It's a pretty tense situation, but. Wanted to also bring up the DAX here just to kind of give you an exercise in volatility. The DAX, as we know, has been in a relative weakness type downtrend relative to the S&Ps. And here's our daily. This is what we want to focus on. And this morning, if you watched our show, from 8 to 9, we do a pre-market kind of dissertation on what might be happening globally. It's called the Global Market Pulse, actually, from 8 to 9. We talk about, inflection points and what to be aware of during the day. And, we were above our unfair highs. If you can see this, folks, on the radio, you can't see it, but those unfair highs on the DAX are and were around 92.55, and the downside was 90.43. Well, we actually explored that entire fair auction on a daily, which is very rare, in about 30 minutes. So if you're trading the DAX, remember, I think it's $25 or $30 a tick right now. Maybe it's 20. I don't know what the latest point value they put on that. But if strap your seatbelt on and be prepared for volatility, no matter what happens in that particular index, because it's usually over exaggerated. And on a relative weakness scale, the DAX is proven to be within a fair auction, unlike the S&P above that fair auction. So again, DAX has kind of proven itself out to be a weaker instrument. And I'm not saying go out and put a long S&P short DAX spread on that intermarket spread. Those are interesting to look at sometimes. But the DAX is a volatile instrument, and if you're faint of heart, stay away. All right, now let's go to one of the things that I like to take a look at, which has been one of the more easier setup, high probability, high risk reward scenarios. Somebody just told me it was €12.50 a tick, and or $12.50 euros per tick. And I think there's a larger contract actually that might be a little bit bigger than that. But we're taking a look at our weekly on the 10-year, and what we've kind of taking the stance on with this is, and as this might have been a flight to quality today when the disturbance happened, but this thing's looking for any reason in the world, so to speak, to go up, and it proved itself out again this week by using that breakout point at around 125.21 that we've been speaking about, closed above last week, came back and retested this week, and then off to the races. And the daily situation on the 10-year, as you can see, we came down and hit the unfair highs at 126.0304 to the tick today. To keep that long-term trend is up. Let's try to find support levels with putting our stops down below those levels to try to launch even higher. And as little or good sense that makes if you're looking at it from a fundamental reason where the stock market's almost on all-time highs again and rates are going lower, that disconnect in that normal relationship over time, really, as a trader, you just got to, it is what it is, and you got to turn the wrench the same way until you're told to do something different. So, again, 126.0304 has been the support on the 10-year for today, and that launched higher. And the good news is on that type of trade, if you're looking at trading treasuries, it's seemingly market goes up, treasuries kind of go flat, stock market goes down, treasuries seem to go up, and as treasuries go up, lower rates, obviously the stock market likes that. So this is kind of a race where you've almost eliminated the short side. And when you're looking at some of the information that we look at with these profiles, you're always trying to eliminate one side of the marketplace, and that one side of the marketplace we tried to eliminate on these treasuries is the short side. Now, we will not have any technical damage, really, so to speak, on this particular product in the least until we get down back below 125.21. So this is something you want to stay away from on the short side, in my opinion, just taking a look at the basic profile technology that we look at on a day-to-day basis. Now, something else I looked at today in the global disturbance here is gold. With that type of international event, gold, in my opinion, should have rallied a little bit more and spiked a little bit more just on fear alone. We're still hovering right around that 1303 unfair low on our weekly. So that's the fence, if you will. As you look at this product, the compression that's happened over time, lower highs, higher lows, coming down into that 1300 level, really hasn't changed. And today we've had some long opportunities at that 1307 area, which was kind of that border above that 1303 area to try to enact some longs. We've caught some good bounces there, as you can see. For you guys listening on the radio, we've tried to, we've gotten back above 1303. We got above 1307. We were using that 1307 to trade a little bit higher. Well, today we talked about pre-market. Got to say uncle below this 07 and for all intents and purposes below 1303. And if we get back above those areas, you got to be able to get back in the game. Taking stops is a part of the realm of trading, so to speak, and we want to try to, lose a little, make a lot, and that's the theme of any good trader, any good investor. Hopefully, will not let things go too far against him before he says uncle. So, taking a look at gold, we're back above trading above 1303. I think there's going to be somewhat an unrest, so to speak, in investors' minds that what will happen over the weekend. Anything can happen. Putin's got nuclear weapons. I don't think that's going to happen. But again, gold's always been that kind of inflation fear type hedge, and you've got to pay attention to what's going on in the gold environment. But that being said, in my opinion, gold should have already rallied quite a bit off that news alone and probably stayed up, and that's relatively bearish for gold in general if you look at it in that sense. Now, if you're looking at silver, a lot of guys that watch this show, a lot of people out there listen to the radio follow silver and gold. Silver kind of showed its hand to be somewhat weaker than gold on a relative scale below that 43, 44 area. And if you look at the daily, we have this new inflection point, okay to be short, not okay to be long, below 1986, 87, and that just, imploded in a big whoosh sound below there. We had a little bit of a, slight rally activity here. I'm going to show you on the 240 as we rally back up. But, it showed its hand again. This is the type of instrument. It is what it is. Gold's acting a little bit more weaker than it should, and silver's kind of in tandem on a relatively weakness type situation, going down even farther, faster. I'm John Logan. We'll be back shortly. We'll cover quite a bit today, so come back and stay tuned, and we'll hit a couple of stocks that are in play and a couple of scanner picks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year, and if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hey guys, welcome back to the show. Tom O'Brien's out this afternoon. Myself, John Logan, and I think David White's coming back on at 4 o'clock. David White's got the coolest music on his show. I love The Who, and he's got a great show to boot. So if you ever get a chance to catch his show, please tune in. It's one of the most insightful shows on the network, in my opinion. Let's go right into the NASDAQ, and let's talk about something we've been kind of focusing on and as a trader, you try to find anomalies or relative weakness, relative strength type trades that are going on in the marketplace. And if you've been looking at the NASDAQ and some of the leaders of the NASDAQ, that NASDAQ 100 index, we're looking at the futures right now, and they're trading 39.75 as of the time of this show, and the market's still open. It's a Friday afternoon. Anything can happen, but I think the market is obviously shrugging off some of this news right now. This thing has really provided, as the S&Ps have pulled back, the NASDAQ really hung in there, and we never even really got below what we call our mode of our bell curve, our POC, if you will, at 38.43. This is our weekly view on the NASDAQ, and here's the daily situation. That 38.43 combined with our 38.53 daily unfair lows, we never closed below our most recent profiles before we had our new profile appear, and that really was the telltale sign that okay, let's try to find something strong in a weak, broad marketplace. And the NASDAQ definitely fit the bill. So as we look at this, and we never had a close below, we were looking to go long above these areas on the NASDAQ relative to the S&Ps. And I think a lot of folks were expecting a little more downside on the S&Ps, and that's okay. And it would have been okay to get stopped out of this, and I actually did personally get stopped out of this trade below 38.43, 38.53. But as we showed the strength intraday that happened, as we showed the strength and never had a close below that general DMZ, as I like to call them, close above, and we started meeting targets a lot earlier than we did on the S&Ps. We met our newest target at 39.12, and now I think we actually made new all-time highs in this future today. I wasn't even really aware of that, actually. Wow. So the relative strength of the NASDAQ has borne itself out here. Do we have a caller? Is that what I'm hearing? No. Or do we? Hello?
Yeah, hello.
How are you?
Yeah, I'm okay.
What's on your mind today?
I have a few dollars to spend on some oil stocks.
Okay.
I believe oil is going up always. Yeah, that's some commodity that we always need, oil.
Yep.
There's one here that's called EC. It's at $34.
EC?
Yeah.
Echo Charlie?
Yeah.
Okay. I pulled it up.
It's Colombian.
Okay.
It makes hydrocarbons and some other things. Do you think that's a good stock?
Okay. Well, you want to hear my 2 cents on this based on some of the technicals I'm seeing?
Yeah.
Okay. And what was your name, sir?
Jazzman.
Hey, Jazzman. How are you? All right. So, the drill is in some of these oil stocks, you want to kind of get a bearing on crude. So what we're going to do, they're mostly related to the price of crude for the most part. So what we're going to do is we're going to pull up crude. We're going to pull up the September contract really quick. We're going to look at our weekly situation. Obviously, we had a technical breakdown around 103, and on the daily, that was our weekly. On the daily, we actually had that technical breakdown recently below 97.55, and we didn't want to kind of bounce off of those daily unfair lows. And what we've done is broke down. We've kind of come back and retested based on the noise, scare, fundamental situation going over in Russia and the Ukraine today. That was just kind of a relief spike, I believe. But we've come back up and touched today the general 97.55 area. But again, talking about relative strength here and relative weakness, as I look at EC, and let me pull that back up wherever I put it here. There it is. As I look at EC and I look at the weekly situation, it's not actually cooperating even as well with that spike in oil, and it's sitting on, most recent lows on a long-term basis, and we're actually also at the same time below profiles. So one of the things I always keep in mind, unfortunately, if you're long this thing, things on their lows go lower and things on their highs go higher, and there's no, obviously zero's the ultimate low point, but as we see these things happening and sitting on the precipice of possibly making new all-time lows, a lot of times, markets and instruments in general will make those moves just to stop people out, because a lot of people psychologically and technically will have stops on the long side below those most recent unfair lows. So, in my opinion, on the intermediate situation too, we're actually sitting below profiles here at 33.37 also. So just a quick read. Just a quick read on. Good. Go ahead. What?
So that was good. Since that is how about the Alberta, Canada, SU, the SU stock?
Okay, so to sum up EC, I think, we really can't think about nibbling on the long side until we get back above 33.37 and actually cross the border of 34.70, just to sum that up.
Right.
Let's take a look. What was the next stock you talked about?
Suncor Energy, SU.
Okay.
Northern Alberta, Canada.
Okay. Obviously, a little bit stronger looking than EC. But what's happened recently? What's happened recently with SU is that we've come down and broken down below on a weekly long-term basis, as I like to call it, below 40.81, and we've closed below there 2 weeks ago. We came back last week and retested that. One of the more powerful trades that you can get into is where we breach an inflection point, either support or resistance, come back and retest it. Now that's actually the powerful trade signal, in my opinion, as we close below, come back, use former support as resistance for a pretty high probability trade on the short side at 40.81 with stops above, and that's happened. We trailed down. We had a little bit of a move up already today in this stock, but the long-term trend, I think technical damage has happened, and you've got something you can lean off of down below if you want to nibble on the long side. 38.84, but I think after we had that technical breakdown, I think you'd probably be more inclined to start looking at areas to either get out of it if you're long still, i.e. about at 40 or 40.06 and 40.81, and that would be where the optimal bounce would happen.
I'm looking at buying the Suncor Energy just to get the dividends, just to get a little dividend play. Is that a dividend stock, oil dividend stock around that time?
Well, I tell you what, we'll talk about it a little bit when we get back from break. I hear the music, and that music means we've got to go to break. So, Jasmine, we'll pick that back up with or without you after the break, okay?
Okay.
Thanks very much for calling in.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Tom O'Brien's out today, and I'm covering the first hour. David White's going to be doing the 4 to 5 segment, and please come back at 4. David is a great host, and I'm sure you'll get a lot of value out of listening to him. We talked about SU, caller called in, dividends versus where the stock action is. I mean, I'm giving the technical reasons, I think, where SU has had some technical damage on the downside, and you've got to obviously, just to finish that conversation, weigh out what the dividend is versus the actual risk of the stock going down farther. And in my opinion, you've got to kind of cross some borders on the upside to start nibbling on that again on the long side. So let's move right into the dollar. This is something I know Tom covers quite a bit here. But, you know, we've had these unfair highs on our daily, 81.66. We've talked about it on our morning show quite a bit. Never have had a close above there, and we've talked about the way this is crowding this area, and we've had some ricochet actions above, but we've had a pretty good pullback today on it, and we talked about some downside targets of 81.17. on the downside, and the upside range 81.66, and we've obviously had some noise around there, but this is where I'm getting that 81.17 unfair highs on our weekly, where we had kind of broken out before, and we have never come back and retested that area. So that's the unfair high 81.17 on our weekly. All right, let's get right into a couple of stocks that or equities, that is, that we always try to pay attention to. And we've talked about Facebook quite a bit lately, and we've talked about crossing some borders on the upside. 72.59 are those unfair highs on the weekly, and that's coupled with our daily unfair lows around 73.57, and that little DMZ we've kind of got to stay above or below. And Facebook, which kind of acts on its own quite a bit, it's a very big social media type stock, and if you go to Stock Twitch, you'll always see that as one of the highly ranked, talked about stocks. And right now, the way I'm looking at it on a weekly is that we're kind of consolidating after the breakout. Even though we've got a profile that's a little bit lower, that daily is going to mean a lot to me. And this type of action where we break out, come back and retest and consolidate is usually, from a classical technical analysis standpoint, more of a continuation pattern than anything else, if that makes sense. All right, so let's move into the other kind of stocks of the social media world. And I know everybody's kind of got this on some radar screens here. We talked about Amazon as it had the news, broke down, kind of gathered itself around the POC on the weekly. We talked about the 309 area quite a bit as targets down below. Those were met, shot through a little bit, but now we're back up into that inflection point on the upside around 335, and that was kind of the wishful target. And in my opinion, if you tried to play this pullback in Amazon in general, I think you've got some targets that you've met. And even though we're above profiles on our daily, those weekly, remember, inflection points take precedence over daily over 240 on down the line, and that's going to be the kind of the Maginot line for Amazon right now. And I'm not saying short against this. I'm just saying if you tried to buy that bounce on the bad news there, you met some kind of supreme targets above at 335, in fact. Let's take a look at Tesla. This is something else that's always on my radar screen. Here's the weekly unfair highs. We've met those targets, 265. But, generally speaking, when you come and get into these inflection points, as a trader, you want to see them come, gravitate away from those inflection points relatively quick. And that way validating that it is a good inflection point to key off of. Well, Tesla's kind of, migrated above. Here's the daily situation. We're not really kind of pulling back off of that inflection point, and you may see a move with Tesla right above that 265 area that we're showing on our weekly. So be prepared for this to kind of do an explosion move up. If you buy that, remember, make sure you put your stops in below those inflection points. But and if we never do that, kind of dims the brakes. We've met targets on the long side already, and I'm just kind of sitting still, patiently waiting, because we are consolidating around those inflection points up high there. Let's take a look at eBay. Something else that's in the news right now, and the action today has been pretty, well, we kind of acted to some degree with the news today. But here's the situation on eBay. We're coming again. We've come back and retested after this breakout above the 52. I think that's 46 right there. Closed above, come back and retested, moved higher. Now we're coming back down to that test again. So if we get below that 52.46 area on eBay, we're going to start having some technical damage. I know we've had that the past couple of weeks, a little bit of noise there. But remember, these on a longer term basis, you've got to look at these inflection points as giving yourself a little bit of breathing room around those, because they're not always to the tick. And eBay, I'm looking at still relatively supportive on the long side, and that's because we're sitting also at the bottom of our profile on our daily, which is 52.60. Okay, so 52.60 combined with 52.48 from our weekly is going to provide support for this product. So long players who are going to try to play that support game, if you will, are going to have to put, say the uncle word below that area, and then think about possibly reversing the position, because if you look at eBay on a daily basis, we haven't broken down below profiles since the end of June or the beginning of June. And now that we're kind of retesting the waters on some people's wills about being long this stock, we may have a technical whoosh down if we just have a close below that 52.60 general area, if that makes sense. All right, let's take a look at something that I've been paying attention to lately. Where are we at? UPS. I can't find it in my stack. I'm just going to pull it up right here. UPS. This is something that, on a broad market scale has shown a lot of relative weakness, and I want to point this out. That target on the downside and those weekly unfair lows that we talk about all the time, 97, 91, and we closed below. We came back and somewhat retested and then started trailing off again. But you've got another focal point here looking at our daily situation to pick a battle right at 96, 96, let's call it 97. So we've come back. We had an opportunity yesterday to kind of put the short wood on this, and now we're back again. But the cool thing is with things like this is you're waiting for high probability areas to be approached to put some decent risk reward scenarios in place, and that means that you want to risk a couple of points to make quite a few. And if you catch these type of trades right, or if you catch them right, you've got a good chance to make some decent amount of points, especially if the S&Ps cooperate a little bit and drag down. The theory is weaker stocks may fall a little faster than stronger stocks in a market that turns. And I'm not convinced that the S&Ps aren't going to revisit some lower numbers. So we're trying to find in that instance some weaker stocks to take advantage of possibly. And UPS may fit the bill here. And I picked that out from the scanner that I use that we've developed to try to pick out what are weaker stocks and stronger stocks relative to profiles on multiple time frames. So another thing we want to look at today, we want to look at Microsoft. These are kind of the stocks of heavy capitalization that are in quite a few portfolios and very heavily weighted in indexes or indices, excuse me. So Microsoft, here's the weekly situation. Similarly speaking, about the same concepts we've talked about before, we have the breakout above our weekly unfair highs at 42.29. We've come back and retested it, which is, again, remember the powerful trade and proves the validity of the move up possibly. So, we're, again, closing above, come back and retesting, off to the races. We're trading 44.82 as the time of this report, but that 42.29 was the launching pad situation for this, and we also crossed some borders above at 44.25. So as we take a look at, what do we do with this now? We always try to talk about eliminating one side of the marketplace. So, we've eliminated the short side in this instance, and the only way we could think about being short Microsoft or even nibbling on the short side on a long-term basis is if we can get back down below 42.29 and close on a weekly below 42.29. And on an intermediate basis, you may have some hope of trading this from the short side below 44.25 and using that as a rocker arm above. But again, putting the odds where they need to be on the long side, you may want to try to eliminate the short side of the marketplace on this particular instrument based on what we've just talked about. Stay tuned, guys. We're going to come back and get into the last 10 minutes of the show. We're going to talk a little bit about ExxonMobil, Halliburton, Hershey, some of the usual suspects of the stock where we're going to try to cover relatively quick. We'll see you in a bit.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country TV to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Hi guys, welcome back to the show. Tom's off today, and I'm got about 8 more minutes left here on this show. David White's going to pick it up next, and David's probably going to talk about Apple. I had somebody in the den here want me to take a look at Apple. He's had some really good fundamental information on Apple, and this is the situation on Apple. For all you guys on the radio, pay attention to this because a lot of people are looking at this, and it's in a lot of portfolios out there. Again, 97.48 unfair highs on our weekly. It looks like we may have a close above those unfair highs on a weekly. And remember, there's a magical 100 number right above that it's more than likely going to retest, especially if we have some technical confirmations here on our weekly unfair highs. So we're trading 97.93 as the time of this show, and we've got our navigator down below. I don't talk about this a lot unless we have divergences, but everything is pretty much all systems go here. The cool thing is on a very long-term basis, if we start having technical damage, that's going to happen below 90.63 on this particular long-term view on Apple. And on an intermediate-term view, here's our daily situation. The complete technical damage would start happening below 94.53, and that's a lot of wiggle room there. But again, Apple's got some volatility in it, and for a stock that's almost $100, you got to be prepared for a little bit of volatility, and that is approximately anywhere from a 5 to 10% retracement back to start having any form of technical damage there. Okay, somebody else. Let's take. There was another one here. IBB. That's the biotech iShares, and what we're going to take a look at, just because somebody mentioned that, we've got. We've reached weekly unfair highs this week. We're sitting right there. 263.41 is where those weekly unfair highs are, and we're trading 263.45. So a close above there would be pretty significant also, just like Apple. But, as I look at this, I would normally say that, we've reached some targets, and, it may be time to start taking some off the table there, and that's never a bad thing. But as we look at the weekly and as we look at the daily, I'm noticing that our navigator is actually going into the zero line here, which is actually kind of an esoteric, kind of seen that movie before kind of situation where we're kind of compressing almost into a low volatility situation where we may move even higher. So even though we're at an inflection point on the weekly, pay attention to the weekly close, which I guess is in about 5 minutes here, and pay attention how we open on Monday. If we open below those inflection points on the weekly, we may settle back for a while. It's never a bad thing to take profits, but it looks to me that we may be just kind of compressing into another move up, even though we're at that weekly unfair high. Somebody asked me about stock twits here. I had stock twits up, and this is a really cool little company that provides a heat map on social media. So what I do, generally speaking, is I come in here to this heat map, and it's got things split up into different sectors: technology, services, healthcare, blah blah blah. Looked at services, and I can see very quickly by the size of the rectangle JCPenney, and this is actually on eSignal along with the Tom O'Brien Show, or the TFNN network, excuse me, as one of the pull-down menus only in the app section. So you've got stock twits and TFNN. JCPenney obviously had a lot of social media on it today. Amazon, Priceline, Netflix. So you drill down into it, you see what people are talking about. Is it up or down based on the social media, percentage-wise, up or down, Netflix? But it brings me to something else I want to show. When you mentioned that, taking a look at this, I want to take a look at healthcare. And as you can see, MNKD was one of the most talked about instruments for the past couple of days. You pull it up, it's obviously down on the day. So what we did, and what you can do, if you want to trade these stocks in the news, so to speak, and the things that are the talk of the town, or however you want to coin them, what I do is come in here and look at them, and I'm going to pull up the chart here, and I say, okay, it's in play. A lot of volatility. Now let's look at the numbers. Let's look at the inflection points and figure out how to actually either buy or sell this thing. So we had the news that day. We talked about that morning, if you're going to try to buy this, don't buy the highs. Let the market come to you. There was a focal point around 857 down into the daily unfair lows, which were around 811. So that was kind of a span, a collection area, if you will, not to buy this thing up in the $11 area. Let's wait and see if we get a pullback. These are social media picks again. And that was a trade that got stopped out if you were going to try to buy the news instead of sell the news around that 850 to 809, 811 area. And lo and behold, the thing's trading lower than it's ever traded at 687. So I guess one of the things I'm trying to say is if you're going to look at the chatter of the stock world and the pump and dump situations that may be out there, whatever, try to focus on things that are household names that maybe have activity on it. Try to take a look at some of the inflection points that some of our profiles may provide, and then pick your battles in high probability areas in general to try to trade these things, because otherwise you're just kind of, there's no leverage. All right. And the cool thing is about using some of these inflection points, and I've got MNKD still up for all the radio people out there. The cool thing is about using some of these inflection points is where to say uncle. I mean, not, if you guys have been trading for a while, not every trade's going to work out, and you want to make the ones that don't work out as least painful as possible. Well, this at least allows you to put the stops in oriented around the inflection points and have a backstop or a fence, if you will, for the thing to move hopefully in the correct direction. Okay? So we've got a couple of minutes, actually 1 minute here. I want to bring up one more stock here that was picked out on our scanner. It's Citigroup, and I'm going to pull up our scanner really, really quick. And wanted to pick out stocks that were doing very, very well based on coming in here and looking at different time frames, different indices. Probably can't see this, it's scrunched up, but I was wanting to see daily situations that were at the top of my box. And Citigroup fit the bill. Top of the box on the weekly, top of the box on the daily, and sitting right above both. So here's our weekly situation. We're right there. Come back, retested. Here's the situation on the daily. We're provided a high probability area around that 49.98, let's call it 50 area to pick a battle. And that's where we can place stops oriented around it and hopefully have some profit targets well above. Thanks for joining us today. David White is next. I know you're thoroughly going to enjoy the next hour. And have a good weekend. Remember to take a break from these screens. Clear your head. We'll see you Monday morning.
And this is Dave White sitting in for Tom O'Brien. But I sit in just about every Friday afternoon to do the Tech Insider Hour. And just a kindly reminder, we're going to get to it at the bottom of this segment, but we've got a Tiger Dollar promotion. You want to check that out. We'll talk more about that in a minute. And of course, we had a market that normally on expiration day for monthly options is a quiet day, but there was no quiet out here today. We had the old Ruskies and the Ukrainians going at it, and by the end of the day, they weren't exactly sure if they did go at it, but they're going to meet anyway on Sunday, and that seemed to calm the savage beast of the market out there. But we were probably, I think we went down about 20 handles on the S&P cash fairly quickly, and from the reaction, I figured by the end of the day it would probably be a bust. And if it was hook or crook, they tried to get this thing back out to where they thought it was going to expire yesterday. And I think maybe they got it close enough out here. When we look at the markets, the S&P basically coming out flat, 1955.08 for the close. The NASDAQ composite 44.64, and it was up about 12 points. So NASDAQ continues to be the stronger of the bunch. I didn't even look at the Dow. I think it was 50. Was it 50? I don't pay much attention to old Mr. Dow. It's 30 stocks out of, 6,000 trading. Probably not very statistically necessary. It looks, I don't really see much out here. Yeah, off 50. Yeah, I was right. Off 50, 1662.91, 0.3% lower. But I have a feeling that had a lot more to do with the stocks in that. When we look at the major stocks in the tech sector, like Apple, Intel, Microsoft, Tesla, Netflix, and Amazon, not a great deal going on out there. Basically Netflix up just a little less than 2%, up $8.32 at $459.19. The rest could be a bounce this way or that way, but Amazon's off 0.3%. But I'm not going to really say that today meant a lot. We had options expiration. Of course, Monday and Tuesday we're going to have options rollover. Probably going to see some decent volatility in those days. At the end of it, though, I don't think you're going to see a great deal of movement. Most people, I've been talking about it on my daily show that is on most of TFNN.com between 2 and 3 Eastern every weekday, every trading day, I guess. But we're starting to see that end of summer, getting into where most of the people on Wall Street will be leaving for vacation next week. At that point, they bring in their B team, and they say one thing: don't let this market move up or down. I don't want to see any momentum. I don't want to have to come back from my Hamptons vacation to take care of it. So make sure not much happens. So normally this week is extremely light on volume, and most of the time the B team traders are going to be taking the opposite side of any movement in this market. So get ready for a lack of volatility next week, along with a lack of volume. Now, maybe some major event like Putin doing something comes in. My guess is it does not. And we're probably looking at a slightly higher market all the way into the first week of September. Of course, September 1st is our wonderful Labor Day, and that'll make a short week then. But at least on the NASDAQ, which I concentrate on most as the tech guy here at TFNN, we are looking at a market that probably, I think on the 3rd, you've got Samsung coming out with their new smartphone. Probably not a big a deal. Then the 9th, which I think is on a Tuesday, we've got Apple ramping up the PR machine, and there'll be no end to the amount of discussions about just how great and how wonderful. And we should all bow to the altar of Apple. They've got the best PR machine in the world. They are going to have some new smartphones coming out. We already know from leaks that it will be a larger smartphone. It kind of takes me back to one of the days there was a convention in Las Vegas, and it started right after the personal computer revolution for the most part. My first year, I think, going there was 1985 or 86. It eventually became 500,000 people and more showing up for a computer convention. But at that time, it was still small. And I remember standing in line to get a hot dog at the convention center. And Bill Gates was standing in front of me, and Steve Jobs was standing behind me. Bill Gates was grinding over the hot dog vendor for the price because, of course, it's a captive audience in the hall there. He was, even back then, I think it was $2.50 for a hot dog, and he was so mad. You could already tell he was a dollar and cents guy. Steve Jobs, though, was in back of me telling somebody, maybe this was 86. I'll have to think about it now, was busy telling everybody why no one needed a color monitor for a Macintosh. At that time, of course, all they had was that one iconic Mac with the semi-green screen, and just no reason to have anybody needs a color monitor. So I got to listen to about 2.5 minutes of that, and about 2.5 minutes of Bill Gates saying why a hot dog was too expensive. no real amazement after several years that we were watching Bill Gates continue to build his massive fortune and Steve Jobs kicked to the curb just a few years later. But when we look at the PR engine, I think it's very important to talk just about what happens in that, and we'll probably get into it a little bit deeper in the show. If you're into commodities, September corn rose 3 cents to $3.66 a bushel. Wheat rose 15 cents to $5.52 a bushel. November soybeans fell 4 cents to $10.52. September ethanol fell 2 cents to $2.16. And November sugar, I know Andy Heck likes that sugar, settled to unchanged at $25.88 a pound. So we have a little bit of that. Of course, when we get into gold, gold was down about $22 when the Putin versus Russia versus Ukrainian information came out. And it's not even clear what that information is. It may all blow over by Monday. But gold off $10.60 after being down $20. It got to about $5 off, but still could not rally with all the negative news and move in the market. Silver was off almost 30 cents, 29 cents, down to $19.61 an ounce. West Texas crude did rally on the information, but I think maybe we'll get into some charts maybe in this first segment before I get into the tech news that made me think that we were probably looking for a little pop in West Texas in the short term anyway. Up $1.45, $97.03. If you want to, you can give me a call at 877-927-6648. You can also email me your question at path@tfnn.com, and you can post a message in our Tiger's Den if you are a member, and we'll try to get to it during the show if we don't have too many. But an interesting day nonetheless. As we get back into the charts, we were talking about Netflix and some of these big iconic stocks moving and getting awful close. We're probably going to see a little bit of this next week. Unfortunately, experience has taught me to not get too deep into the short end of the pool when we come up to this last week in August. Now, if we did have major war, atomic bomb go off or something, probably would change my mind on it. But unless we have a major geopolitical event, not just the hiccup that we had today, I would probably change my mind. Unfortunately, we know that for the most part, the big traders are going to be gone, and they're going to be willing to throw a huge amount of money, mostly other people's money, at making sure this market does not move next week. But when we look at some of these stocks, a lot of them are up here at the highs. We talked a little bit about these stocks last week in the Tech Insider Hour on Tom O'Brien. But it is, we're getting close to these highs. I'll tell you what I'm looking for, especially on Netflix. We'll look at Amazon and Tesla and some of these others. We'll come back. But remember, you can give me a call. When we come back, we're going to talk about the way you can make instant money. We'll be back in just a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back in, of course, this is the Tech Insider Hour, normally on Friday in the last hour of the Tom O'Brien Show. Tom's off today, so it'll be me winging it all by myself. Now, if you want to make some money, we said it. I'm thinking it's going to be a light week next week with light volatility after Tuesday. But if you are looking for a way to make some quick bucks and turn your money into even more money, one of the best ways to do that is with Tiger Dollars. If you want to get any of the newsletters or products from TFNN.com that we offer, you can sign up. And right now, if you get a purchase of $500, we'll give you a $200 bonus. $1,000 will give you an additional $400 bonus, and a purchase of $2,000, you'll get an $800 bonus. So if you're looking at getting some of the fine newsletters, which I have 2, or any of the other hosts on TFNN, you can certainly pick those up. But we will be looking for your order soon. I guess that's it. But just make sure and go to your Tiger Dollar page on the front page of TFNN and click on for the Tiger Dollars, and you will find everything you need there. But if you were looking at picking up or renewing a subscription, today is the time to do that. And I don't know what it will take. Maybe it'll be you flipping a switch when you get home, you see the light come on, or when you put your hands underneath some cool running water in your sink and you go, now's the time I need to go right to that TFNN page and sign up for some Tiger Dollars. little subliminal advertising there. I don't know what you'll remember. Maybe it'll be when you sit down, when you get home. Either way, time to check out those Tiger Dollars. If you're just joining us, the S&P basically ended up flat, and the NASDAQ up about 12 points after a little shock to the system from some news about whether or not Russia had invaded the Ukraine, and by the end of the day, ended up, closing down maybe 5 or 6 points off the highs. But intraday, we did have a 20-handle move down into the 1940s or something. In fact, what did we get for a low out here? Yeah, 1941.50. And, of course, that was pretty much it. We closed unchanged. It is an expiration day. Of course, we're going to have options rollover on Monday and Tuesday, so look for a little volatility there, and then we'll get into it. As we get into charts, and especially technology charts, we're going to take a look at what's happened. As I said before, Apple's going to be coming out with their Dog and Pony Show September 9th. It's getting awful close. It's going to be very hard for the NASDAQ to go down with 13% of it probably on the never-ending PR train. And, of course, CNBC will echo it. It's an easy story to cover, and others also. And, of course, they're pretty good about beating their own drum. But Netflix, a lot of these other stocks may look weak here, but I have a feeling that we may have to wait to some kind of short squeeze in these before they roll over at least a little bit. In Netflix, we're starting to see a lot of these stocks come up to the previous highs on lighter volume. And when we look at Netflix, what you really want to be watching out here is this high volume push, I guess fairly decent volume push up to with a 5.4 million shares. Actually peaked out at 475.87 on July 2nd. We're kind of moving back up on those range, but even today, nice little pop in Netflix. Of course, Netflix is going to be a hard stock to knock down. One of the problems that I've seen is the way that they do their accounting. We've talked about that before. It's going to be probably a little while before we start seeing a lot of the movies that they buy expensed back out. I'm kind of actually finding it kind of hard to find things I want to watch in new movies. I tend to be watching a lot of TV shows on it and documentaries. But pretty light in the documentary department as of late. And most of the movies that are coming out I've already seen. So I have to say that why it's probably still worth the $8 or $9. Maybe a little bloom has come off the binge watching rows. But we continue to watch these. The biggest thing I see is just the movement back up in here. Of course, you're going to want to see this thing. One of this thing I'm talking about is the July 2nd high at 475. I basically call it 476 tested. Now, normally it is not uncommon to see these stocks come back up to these highs on very light volume and see a short squeeze into that light volume that I'm anticipating next week. And it's normally you just see the market kind of drift up a few points every day. And, of course, eventually the shorts cry uncle, and that is it. But when we watch Netflix, kind of interesting out here. Amazon, another one of these stocks, pretty decent and bad news out here. We are coming back to fill this gap, and actually multiple gaps. But even then and on today, not a lot of reaction when the S&P came down 20 points. It was, I'm going to say, muted in almost all these technology stocks. Of course, Amazon came down with huge volume on the 25th of last month, and that volume was almost 18 million shares. So we're up today with 4 million shares. So we are back into these lines, but no real indication that this thing has stopped. And my guess is that we're going to float back up and at least finish filling a lot of these gaps on a very light volume going into that first week of September. And remember, of course, September 1st is Labor Day. That will be on a Monday, so that'll be a shortened week of 4 days. Volume probably not going to even start to pick back up after that long weekend till Wednesday, maybe Thursday, and then you're already out for the week. And, of course, that Tuesday, then we're into Apple. So for technology, there's a fairly, unless we get some really bad news, there's a fairly decent discussion to be had about a bias that's going to be hard to beat, which is light volumes, which are never good for shorts, and, of course, a down-moving market, plus a lot of new technology news coming out. It has been rather quiet at Lake Wobegon, the tech Lake Wobegon, over the last few days. And, of course, everybody taking their vacations at this time. So you have to kind of really watch about being short. Now, after the first of the year, after the 1st of September, we're going to be looking at a market that has come back, made a false breakdown to that 910 level. And the question is whether or not it ever gets back down there. To me, that looked more of a shakeout. And maybe when we come back from the break, we'll talk a little bit more about it. But I suspect that we're going to get a whole lot more stimulus, especially with the problems in Germany, and especially the way Germany reacted to the news of Putin coming into the Ukraine. I think they were off 1.5% or almost 2% earlier, and didn't really recover. Our market recovered, of course, after they closed on Eastern time. Most of the European markets closed at 11:30, and it had pretty much come down. Now, Monday, we're going to get a much better opportunity to see how that works out. And, of course, the Russians and the Ukrainians are meeting Sunday night, which is about noontime on Sunday. So the futures, when they open up Sunday night, probably should give us a good indication of whether or not they're throwing darts at each other. I think Putin's going to wait until the winter, when he has the most advantage by shutting off the Germany's natural gas. We'll be back in just a minute.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we are back. This is Dave White sitting in for the Tom O'Brien Show. Of course, normally we talk on Fridays about the Tech Insider, pretty much the same thing. And we're going to look at a few more stocks, and then I'm going to talk about some things that I think are of interest in the tech community. But we saw Apple. It kind of broke down a little bit last week, but then instantly came back in the trading range. And, of course, kind of tough to see how this does not ramp into the giant PR that we are probably going to be taken care of here just shortly. But it is interesting. But I would imagine that we at least test this 99.44 high from July 29th. That had 55 million shares. We did 48 million, 49 million today. So not going to be incredible to see these things start hitting these highs over the next couple of weeks with light volume and probably a decent amount of shorts coming out. Of course, this week Cisco had some earnings and not a huge move in comparison to the probably bad or at least dour call that John Chambers made. Going to be, I think the only thing that really kept this in the ball game was that he's going to fire another 5,000 or 7,000 people, which they've been using fairly effectively to keep this stocked up. But it is coming back into support, much like a great deal of the other companies had and bounced. When we talked last Friday, we were talking about both Intel and Microsoft coming back and filling these huge moves up. Of course, Microsoft, actually a nice day up today. You had fairly decent volume, 41 million shares. And, it's come back and filled that huge candle up on the 16th. And just a nice trading range, probably between that 42.50 and 55.71 high of July 17th. Same thing with Intel. So we don't have a lot of reasons out here to get really bearish about these stocks. Both of them should have a good 6 to 9 months by themselves. Now, of course, dependent on the economy, but going to be very tough to figure out how these stocks do poorly unless the market falls off significantly. Now, Intel did pretty much the same thing. It gapped up on high volume, came back to the August 6th low at $32.39. That volume was, 49, is that right? 49 million shares. But that gap up was 135 million shares, and that gap on 716. So it did exactly pretty much what it was supposed to do based on volume, and probably in a trading range, I suspect, till we get in there. Now, in news for Intel, they've just released their 14-nanometer chip, especially for mobile. And I'd been wanting to get one of those Microsoft Surface tablets and doing everything, chomping at the bit to get it. I knew this chip was coming out and was wondering when those Surfaces are going to ship with the new processor. But a lot of things that they were talking about as far as power and how long these devices would last with reduced power. Basically, it's truly exceeded everything that everybody looked for. And, of course, now that they've got this 14-nanometer technology out in their flagship products, it's only a matter of time before it comes to the tablet and smartphone industries. So Intel probably looking fairly decent. It's going to be hard to see how Intel, with a vastly superior product, is not going to get at least part of that high-end market out there. I know Intel is going to be making a specialized chip using this technology for Apple. And of course, most of the other manufacturers that manufacture laptops and ultra portables are going to go after this. But reading the data, I'm not going to get too far in the weeds, but making a chip smaller, it does everything you want. Now, the power consumption is a whole less, but they were really able to take it to a new level with the amount of heat that these new processors are putting out. So I think they released them a couple days ago to manufacturing. That means that we're probably going to start seeing a great deal of discounts on existing PCs. And there's nothing wrong with what we have now. But if you're looking for one of those ultra portables like a MacBook Air Pro or something like that, look for that and the Microsoft Surface products to get a lot more time and be able to run with a lot less heat that they have in the past. So Intel continues to be the premier chip manufacturer. When we look at Taiwan Semiconductor and the rest of the people, global foundries, boy, just way, way behind. Probably a year and a half, I suspect, at the moment. Intel continues to push very hard. The downside to Intel is as they get into those tablets, look for margins that are going to fall. In the last reporting period, Intel had margins that were better than Apple's iPhones. So you have to continue thinking that these companies are kind of priced for perfection. But Intel does seem to be delivering that. So when we look at technology coming in the near future, look for those new chips. If you want the hottest, latest, look for the discounted versions of those with 20-nanometer technology. They're still awful good. Saw some other articles out here. We talked about Cisco. Facebook, not a lot happening in it. Gilead had a nice pop and had a lot to do with the outperformance of the NASDAQ today. These stocks just keep running. Nothing looking like Gilead is anywhere close to pulling back. It broke with volume to the upside all day long. So pretty tough to see any of these breaking down. We had been short the IBB and covered it a few days ago when it was pretty apparent that it wasn't going to break like the rest of the market. and a false breakout kind of in it. But we're up not bad volume today either, 1.1 million shares. And you need to go into 266.43, which is the July 3rd high. Not a lot of volume out here, 720,000 shares. We're basically into those candles right now. And even the heavy volume down days were just 2 million shares. So not going to be tough, I think, to probably hold out through next week. Now, I suspect as a broader call, I'm looking for the small caps and mid caps now to start picking up the pace between now and election time. Most of these stocks, like I said, are priced for perfection. Is there a little money going to the upside here? I think so. But much more likely what we're going to see is these stocks raise somewhat. We're probably going to see the NASDAQ go after 2,000 here fairly quickly. But I think the run in a lot of these bigger stocks in the NASDAQ are all going to be muted. And what you're really going to see is the stocks that have been the famous penny, less than $5 stocks really start really moving out here. And that would be very interesting to see what else do we have going on here. Google, this thing not really doing much of anything. If we've had a stock out here that is meandering aimlessly, it certainly is Google. I think part of that is not that they're not making money. It's this that they're not making sexy, cool money, which is social media and all the things that everybody's very hot on. If I was looking for a stock that would outperform everything but Gilead here in the top 9 stocks in the NASDAQ, it would be Google. They've still got a very good move, and maybe slow and steady is going to win the race. My guess is, though, that they're going to be the pick of the litter come this fall as they continue on. Qualcomm, of course, going to ride that train. It had come down fairly significantly after earnings. Earnings probably a little disappointing because they didn't ship a lot of product to Apple. I suspect it's going to come back up and run to this $81 range fairly quickly on the Apple news. Some of the other problems had been kind of a little war between them and the Chinese government. China doesn't quite like them not giving all their technical details of how to build all their chips to them. Of course, there's always a price for doing business in China. Qualcomm has navigated it probably the best of anybody by not giving them any technical information about how they build their chips. And, of course, they haven't been able to steal it either, which makes the Chinese probably even madder. But not a bad setup out here, especially as we look at a big smartphone run that we're going to see with that September 9th release of the iPhone 6. Anyway, we'll be back in a minute and try to look at a few stocks that people asking about. You still have time to call at 877-927-6648.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
And as we come into the last segment and wrap up another wonderful week of programming here on TFNN.com, just a gentle reminder that we've got the best sale ever on Tiger Dollars. And you can spend $500 and get another couple $100. One of the best deals ever. Go to the front page of TFNN.com and check it out. But if you want to get any of my newsletters or any of the newsletters or any of the software or any of the offerings or the webinars or all the other stuff that we have here at TFNN, and you want to get into trading maybe just a little deeper, you certainly can check that out. And it's the best way to get a huge discount on any of the offerings we have here at TFNN. And Tiger Dollars never expire. Unlike me, I expire about 10 o'clock every night. Anyway, of course, this is Shark Week. We were talking about Google a little bit. And nothing would be, how could we end the week without talking about Shark Week? We were looking at Google, and there's two bits of news out here. Comcast and, of course, Time Warner have both gone significantly higher in revenues from offering internet than offering actual cable television. That basically happened over the last few months. Of course, this week they had to back out of giving the last FCC director a $150,000 bash. I think they withdrew that cash yesterday after it became apparent they were buying everybody that didn't glue down in Washington, D.C. So she's probably not too happy. She was hoping to get on that big gravy train and have a big party at the expense of Time Warner and Comcast. But they have now gone past that. Of course, Google's been working hard at working out whether they want to be in the ISP marketplace, and trying a few out there with a few test drills in certain communities, certainly offering much, much faster internet speeds than Comcast or Time Warner. But they've been, I haven't really talked about it much, but they've been putting fiber optic lines between the U.S. and Europe, and now between the U.S. and Asia. But just as a Shark Week on the Discovery Channel is starting to wrap up this weekend, what we do know is that Google made an extra tasty casing for these fiber optic cables, and the sharks have been going after them. They're starting to pull up a lot of these cables, which are about the size of a baseball, fairly heavily armored for the few and very tiny amount of fiber optic cable that actually runs inside these things. But they've had 4 major defects in this cable, and they go down and pick it up, and it's all shark bites. What this does tell you, though, is how important that the internet is going to be, and the fact that Comcast and Time Warner are getting together, I suspect, is very important, and they see that the cable business going away. And the only way to continue to move and grow is cut the water off at the head, which is the internet itself. We talked on my daily show about the black eye Comcast got for not letting somebody cancel their account. Several people this week also still working to do things like cancel their account. A gentleman called in and recorded it. It's on the internet somewhere, where he called in at about 40 minutes before the close of day, and they just put him on hold until it went off. They're continuing their horrible actions, and if you wanted to call your senator or congressman and say that this marriage made in hell should not go through, I would encourage you to do that. Comcast and Time Warner, not good for any of us out here, but kind of an interesting move to see the sharks going after this cable. But what it does show you is that quietly Google is continuing to go after that business, and knows that really that last mile going to your house, with all the discussion of mobile, is still rapidly and hugely important. Rapper 50 Cent is coming out with some new earbuds to go up against the acquisition of Apple. So the interesting part about these earbuds is that they will tell your heartbeat via SMS messaging back to your phone and or anybody else. So we talked a little bit about Apple coming out with their new iPhone. There's going to be some new sensors in it, most of them revolving around health. Of course, they've got their new iWatch product that's coming out also. But we're going to look at probably 5 or 6 new sensors over the fall as new phones come out. Things like these new headphones with sensing for things like your body temperature, heart rate sensors, a lot more health-oriented devices. My guess is that Apple will try to keep them out. Now that they've bought Beats, they'll want to sell their own stuff. But probably still a very good market for 50 cents. My rap name was 5 cents. I didn't seem to go as far as he did with 50 cents. Maybe I should have been a buck. Anyway, 50 cents, fresh off of making so much money, about $250 million, I think, and counting on smart water, is getting into the tech industry and starting to go into that. But going to be some interesting things in that. Also, we've got about a minute and a half left. Other things hitting the wire are, many of the border routers that handle the edge of one network into another network are starting to break. We were talking about Cisco, and I think that Cisco and some of these other router companies are too going to also do fairly well across the fall. Instead of selling more of their standard flagship enterprise routers, I think they're going to be much more into this border router business. If you're a big company like Google, you've got your own internal network, and then where the network meets the rest of the world, those are called border routers. They do a lot of special stuff, but mostly they are the traffic cops of the internet. And why I would not get involved in Cisco, there are other places. In fact, we're long one of them in the Tech Insider to look at that. So keep an eye out on that. I think the internet continues to get bigger and bigger, and there are a few places that haven't been exposed yet, but I think we've got some plays in that. As we go away for the weekend, I hope you have a wonderful and great weekend. And I always say, sell when you can, when you have to. See you next week.